All right, everybody. Hey, this is a Friday wrap-up quick lesson, and I just want to show you something. Hopefully this works out because I use two monitors to be able to stretch and see what's going on for the long haul of the trend, which is what I recommend to my in the classroom. It's if possible, if you can ever afford to get your two monitors, it works better because you can put them side by side, and then you can literally stretch the screen across two monitors and be able to see more of the price action as far as the long haul of what's been going on for a long time, and it reduces the size of the candles so they're not so big and scary. I'm actually looking at the Euro GBP, and I want to share this knowledge with you because this is going to help you with your trading tremendously, okay? Tremendously. So what I taught, and this is just a free lesson, because a lot of people don't understand this. So a lot of times with my charts, I may use it, may not use it, but I know a lot of people do, and that's the 50 EMA, the 50 moving average, exponential moving average. Okay, all right. So let me talk about what this does for your charts. Okay, so I'm gonna take it off the charts. Okay. And as you can see, and this is not to promote the triple arrows, but you can clearly see when they came in on the Euro GBP the last time, you've seen the setup right here, and it started running way up, and that's triple arrows is resetting for a downslide, hopefully maybe next week or so, but that's not the point. So I want you to see what the charts look like without it, okay? And you see prices moving in a steady stream of action. But watch what happens when I add it, why it's so helpful, okay? And as you can see, it's the 50 exponential. White is my color that I use. You can pick whatever color you want, and I use close. All right, so watch this. I'm gonna add it. The reason why the 50 moving average is so important and popular, and I'm gonna scoot this back so you guys can see through time. Hold on one second. Why? A lot of traders, professional traders, like to use the 50 moving average. Okay, so hopefully, like I said, I'm using two monitors this time so you can see as far back as possible in time, and this is going all the way back to January or December, and you can see how triple arrows came in, but that's not the point. Look at this. Watch what happens, because you're seeing it, but you don't know what you're seeing. So what happens is the 50 moving average acts as a equilibrium or the balancer. Okay, whichever way you want to look at it. And what that means is you'll notice that price is constantly fluctuating in and out of the 50 moving average. So it's kind of like I told my team this week, it's kind of like in baseball, you have home plate. So when price moves too far away from home plate, what does it do? It tries to come back to it and touch it. And then it breaks through here, came back down. And as you can see, it's just constantly teeter-tottering, teeter-tottering, teeter-tottering. Then even when it comes down too far, look what happens. This candle spiked right back up to try to touch home base again, continued, came back up, tried to touch it again, dropped, came, and then guess what it did? Eventually it came and touched and came and fell right back at home. You know, it's kind of like a runaway child. You know, they hard-headed and they want to run away. I'm going to do my own thing. Okay. And then you run too far, and then eventually you bump your head a couple of times and you say, what? I want to come back home. All right. And so right here, you can see the price action came right back to home plate again and again and again. And it's just constantly hugging it. And this is going all the way back from December, but I can stretch this chart back as in the eons of time, and you'll notice this. And this is why a lot of people like to use the 50 moving average, as you can see. And I'm still talking to you, but look at our price right here. It literally touched right on the 50 and came back down, ran away, came back home, crossed up, came back down, and it's just teeter-tottering. And see, this is where oversold and overbought kind of stuff. Well, what does that actually mean? I know a lot of people use the RSI, but how do you know it's oversold or overbought? Well, one of the ways you can compare it with your RSI is to actually use the 50 moving average, because what will it do? If it runs away too far from home, what will it do? Try to get back home. And as you can see clearly, this was some big news event stuff that was spiking around. But even with that, when it went too far from home, it still came right back into structure. Came out of structure, touched literally right there on the line. Came out, came back. And this is just going over and over and over again. This is how you know it's oversold. Why? Because it went too far away from what? Home plate. So it came right back into structure. Came down, back into structure. Came down, and it's just going back and forth, back and forth. So who's ruling everything? You can see where it touched right here. Okay? So it's constantly the controlling factor is actually, and this my group sending messages. Hey, I'm doing a video. All right. They're happy. They had a great week. So anyway, bottom line is you can see how it's just constantly hugging this line, like right here. See how it fell way, way deep. Then you got your triple arrow setup saying, whoa, 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 we need to get home. And what did it do? Shoot right back into structure. And there you go. And from here, look what happened. It just constantly was riding the wave, came back, tried to touch it, bounced back up, but it's still following the rules in the direction of the what? The 50 EMA. And then eventually it came back and touched. And another thing people use it for is because they can use it as a confirmation. Let me go here. So even though the triples came in, some people say, well, I'll wait until the price action breaks above and has a candle that closes above or below the 50 moving average, depending on whether you're buying or selling. So with me, I would have got in early with my triple arrow system, but for others, they would have said, okay, here's a candle. I see that this one closed. Even though a little bit, the wick is right here, but it's still closed above the 50. But eventually, look, this next candle would have been your entry, and then you could have rolled it up for the major move. Now we have a reversal, candle close, and this is why I get in early, as you can see, because the candle did close right here. Then you would have gotten in here, but yet you had a pullback, which is not bad. You still would have been okay, because again, this is already telling you, if you had our system, it's telling you where it's going. It pulls back, and that sometimes will happen with the 50. It'll cross below it, pull back, and then it'll come back to home plate and then continue on down. Okay, so anyway, this is just a little quick lesson about the 50 EMA. There's many different ways to use it. Even in our group, there's various different variations of it. One more thing before we go, let me show you this. And by the way, just a side note while I'm changing this, I hope you guys watched that video last week. I had told you about gas prices were going to go up with oil, and sure enough, and we'll look at that before we go. Another time, another EMA that people like, it's the 34. It runs a little bit quicker. So either the 50 or the 34 people use, and you can see even with the 34, it still ran neck and neck within there. So for me, when I was using EMAs, I like the 34. It runs a little bit tighter and quicker, but either way it goes, it's still the same thing. The 50 or the 34 are the popular ones, and you can see it's kind of like running directly in the middle of price action, where it's just constantly coming right back in and out of structure, price structure, according to the 34 moving average or the 50. So it just depends on whichever one you feel warm and fuzzy about. So as you can see, like right here, see how price is just riding at 34? See where it touched, literally touched. And it's just sticking right in the middle of this 34, just touching, riding it like a horse. You see what I'm saying? So whichever one floats your boat, or even if you don't use any, that's fine. Because sometimes I do, sometimes I don't, but I'm just simply sharing it with you. Last but not least, let me go to oil just to revisit that, because we did talk about that one in the last video. And I said, okay, guys, your gas prices are going up. You remember we talked about that? Sure enough, here it is. How do we know? Right here. Okay, right here, we knew, came back and retested. And for those who's in the group, this was a clear, easy money Stairmaster. And sure enough, oil went up, and so did your gas prices. Okay, so it's not that I'm Notre Dame or anything like that. It's just after, and that's my wife over there laughing. It's just that sometimes when you have the right tools and you understand how to read the charts, it's pretty simple. It's not that complicated. Okay, so anyway, if you do want to join us, it's super easy Forex. .com, and once you go to the website, you just click on the button said join, and then you fill out the enrollment, and then you'll be able to purchase our system. You'll have complete access to all of these tools and tutorials to get you started. So as soon as you sign up, you don't have to wait for a confirmation email or anything like that. The username and password that you created, you just go log right back in as soon as you purchase it and get started, so you'll be prepared for next week's trading session. Okay, and we do have live trade sessions 3 days a week on Tuesday, Wednesday, and Thursdays. And then also, except for this Tuesday, I might be off. I have my wife, she's doing an event. I want to support her. But usually our typical schedule is Tuesday, Wednesdays, and Thursdays. We have a live trade room. And then also on Tuesday and Wednesday nights, we have Miss Jenny. They call her the, I forgot, they gave her a new nickname, the Iron Condor or something. She's a beast when it comes to the charts. So, you know, she teaches completely different from me, but she's very technical, and you'll learn a lot from her. So, either way it goes, you'll be doing just fine. Okay. So anyway, have a great weekend. I just want to do the short video, kind of show you guys how the moving averages actually work. Okay. And hopefully it was able to record both screens, because it kind of did this special this time for you guys to stretch it so you can see it for yourself. All right. Have a great weekend. Bye.